Good evening, everyone. Today is December 4th, US Eastern Time. Let's do a pre-market analysis. There's actually a lot to talk about today. I'm not sure if you've noticed, but a major piece of news just hit the market today. Let me ask everyone in the live stream, does anyone know what this is about? If you do, type in the comments. I just want to see if you know what's going on today. We just started and a lot of people haven't tuned in yet. So let's chit chat first and we'll see who knows what happened. So, what happened today? Something bigger than a Fed rate cut. The thing is, the Japanese yen may raise interest rates. They haven't raised yet, but the probability is really high. A yen rate hike could have major impact on global financial markets, and we'll break that down later. Yesterday, US stocks saw a strong rebound. The three major indices had a solid recovery, very strong momentum. Many people probably made some profit from that move. In our earlier live streams, I mentioned my view. The US stock market is fundamentally fine. The core driver is still tech, even though AI spending issues and debt have caused some divergence among tech stocks. But as long as the US debt problem isn't solved and the market is open, this game can't stop, they won't stop, and they won't dare to stop it. The US market now looks like a global casino with all capital flowing and betting here. So, as long as you understand it, you can keep playing it. Alright, enough chit chat. Let's get into what might happen next. How the markets may move today. First, the S&P 500. A side note, the S&P 500 is approaching all-time highs. Over the weeks, we've been seeing a climb, a healthy, steady climb. With a deep market sweep. So over weeks we've been studying a healthy climb and we also had a market sweep. And right now S&P 500 is approaching all-time highs, isn't because of the core mega caps, but because sectors like Eli Lilly previously ignored and caught up and rallied. The S&P 500 had had far more bullish voices than bearish ones. Back on November 12th, I mentioned three case support levels: 6,876, 6,822, and 6,761. So let me write that down. 6,876, 6,822, and 6,761. So, JP Morgan had a lot of capital positioned around those levels. The idea was those levels shouldn't break, otherwise volatility could follow. But they did get broken. All the way down to key level 6,551. Right here. Where the market finally stabilized. From there, we got 6 straight days of rebound. Let me find November 12th. Right here. From there, we got a 6 straight day of rebound, guys. So, right here, do you look at that? Can you see that? Right here, we still have 6, 1, 2, 3, 4, 5, 6 days of a rebound, right here. So, now, however, the move looks like a bit tired. My view, we may enter a sideways consolidation because such a steep rebound, if it doesn't pull back, must go sideways to digest profit. Could it still go up? Yes, but less likely. So right now, what we're looking at likely would be a sideways consolidation before any major move may happen. So that's why I said it's less likely, because there is not enough justification for a strong push currently. Important levels to watch currently are important level to watch is 6,000 An important level to be watched is 6,780. Important. You can go sideways or dip slightly, but do not break 6,780. Otherwise, the S&P's entire structure breaks, and that could trigger another leg down. If it were to sit the 6,780. So now, do you have any questions about the S&P 500? What do you think about this move? Comment down below if you have any. Meanwhile, I'll take a look at some of the news headlines. Okay, if there's no questions, we're gonna move on to NVIDIA. Sorry, before we move on to NVIDIA, we're gonna move on to the NASDAQ. The Nasdaq structure is slightly better than the S&P's currently. It's likely also sideways. Resistance is around 23488. So let's go check that out. 23488. I'll look on the weekly chart first. I would probably set this would be my key resistance level for now. And my support. And for my resistance would be around, I'll set it here first. And for the for this, I will put 2 keys for a moment. I'll let this here. Okay. So it may bounce around the resistance of 23,342 and maybe to the support near at 23,000 lower and at 200. It may bounce around these. Could it break up immediately? Maybe, but we need to see after the open. So now let's go to the Dow Jones. What we're looking here is a healthy funnel with a market sweep right here. But the Dow Jones has been surprising this year. Yesterday, let's look at yesterday. Yesterday was very strong. So yesterday was very strong with a perfect technical alignment. The candle completely engulfed the previous 4 days of bullish signs. This suggests that Dow still has room to run today. If you want new positions, this is directly where you can set up early. So these are early positions. As you can see, the previous 4 days, it has engulfed 1, 2, 3, 4, all the 4 days before. So this is a very good direction where you can start to set up early your positioning. Especially the robotics sector, which is highly correlated. A Trump news item triggered that move, and the sentiment may continue today. There's a high chance that Dow will break 48,431, its recent high. So the recent high I'll set here. This is the recent high. This is the recent high. And it's very likely this 4,400 will be broken. So position early. So, do you know what may have triggered this move? Anyone knows? Comment down below if you know. If anyone knows what this may have been, why for the past 4 days and suddenly yesterday it was? So it was due to, especially in sectors like technology and consumer goods. So, alright, now let's move on to Nvidia. Nvidia didn't rally much yesterday despite the strong market. Let me open Nvidia. I'll open Nvidia right here. Sorry. So what we're looking at, Nvidia didn't rally much. Let me see yesterday's chart. Sorry. So as you can see, Nvidia didn't rally much yesterday, despite the strong market. Even though it successfully lobbied the U.S. government to lift the ban on high-end chips, the market is still not buying its narrative. It's still in a downward channel with more downside likely. As I predicted yesterday from my drawings yesterday, a more downside is still likely. If you ask me whether to buy now, the answer is no. I would suggest the attractive entry level would be 169, or between 169 and 172. I would suggest a healthy entry level right here. This will be a healthy entry level. Whether it rebounds immediately there depends on volume and future catalysts. Right now, too much hype feels unreal. Do you guys agree with this? Alright, I just want to pull up one news. I'm not sure if you know. Meanwhile, taking it. Did you know the big news? Anyone heard? Trump says he will roll back fuel efficiency standard for vehicles. So, Mr. President blamed the existing rules for a surge in new vehicle prices, but experts say they expect little impact in the near term. So, Mr. Trump on Wednesday said his administration would reset fuel efficiency standards for passenger cars in effort to put a lid on rising prices. Basically, he rechanged the law, which was set in Biden's administration, which increased car prices due to they were targeting efficiency. However, now Trump believes that it should be more affordable, thus sacrificing efficiency, not efficiency, sustainability. So because the average vehicle price in the US has risen over time, and it even surged to an all-time high in October, which was above $50,000 for the first time. So many also said, experts also say that the $20,000 car expectation is already dead. However, this new law implemented right now will aid car companies stock. So it's important to watch these stocks as well, as these big moves indicate an uptrend or a downtrend. It depends on what stock you're looking at. So now let's jump to Tesla. Tesla was strongly boosted by Trump's news yesterday. Big bullish candle with volume, but still needs to reclaim its previous rising channel. Do we see this channel? This was yesterday right here. And this was because of Trump's news yesterday. But it still needs to reclaim its previous rising channel. If today it can get above, right now it's at 449. If it can get above, let me see, 455, if it can get above 455, it re-enters that channel and could challenge new highs. So, from November 3rd to November 21st, it was, let me check here. So, from November 3rd until the November 21st, here, from November 3rd to the November 21st, it was a full-on downtrend. Since November 21, right here, it reversed and went up for 5 days in a row. It has flushed out short-term speculative money, so the chips are clean. Even without news, I think it would have risen. We mentioned in last week's live stream that $420 was a good entry. Fans in my group likely caught the move. Pre-market is up 0.5%, around $449 now. So right now it's at $449. So what does this mean for Tesla? Well, yesterday's Trump news had a positive effect on the overall. We are seeing a very engulfed candle, bigger than the rest of the days. And since November 3rd until the 21st, there was a small market sweep, maybe clearing out some chips, cleaning the chips. But right now we're seeing an upward. And if it's able to hit the $455, we could expect a further upward trend. The continuation of this channel we're looking at here, if it's able to hit the 455. However, if not, we may expect a bounce back. So now let's move to Google. I'll search it here because I don't have it. Let's see Google. Okay, we'll look at the daily chart first. We were seeing a downward move and now we're not. So Google has been central to the rebound. I mentioned earlier that its pattern suggests sideways consolidation rather than a straight drop. After 4 days of pullback here, yesterday it recovered a bit, as we can see here, and stabilized at 8-day EMA. It may adjust a day or two more before pushing. I think maybe a day or two it may adjust before pushing higher again. So yesterday was actually a great entry point. Buying today may be too late. If it dips back near $313, that's a good second chance. If it dips, and you may consider at $313. This would be a good entry point. However, now it's a bit too late, so if it goes back to this number, it would be a good entry point. I'm very bullish on Google. It's the first company to have full stack AI ecosystem with all components connected end to end. I think its valuation is still low and it has more room to catch up. So, if you're bullish on Google, let me know in the comments. I want to know what you think. One more time, if you think what you want to enter, right now it's a bit too late. Key levels I would watch out for are $313 if you're planning to enter. So it's your second chance. So yesterday I initially expected weakness, but the ADP data surprised me to the downside, boosting rate cut expectation, which pushed money back into the market. Risk appetite also increased, so risk assets rose. Today, I expected the market to continue yesterday's strength with more recovery depending on the volume. The broader direction is definitely upward. A piece of news today fueled European auto stocks, so US auto stocks may also perform well today. There may be explosive moves. Yesterday, Trump's commented on robotics caused iRobot to surge 80%. Will autos see similar opportunities today? Let's watch. I'll keep an eye on it after the market opens. So, do you think US stocks will be drained or ignited? Let me know below. So, let me give you a little bit of a bigger picture. Short term, funds will buy yen, causing yen to strengthen. Investors must sell US assets to repay yen borrowings. This pulls liquidity out of risk assets. So, US stock, especially tech, may feel pressure. In the medium term, if yen strength reinforces expectations of a Fed cut rate, that can provide support for US equities later. But the initial reaction is risk of cash flow back to Japan, US taxes outflow. So, one question. How will this affect tonight's market sentiment and risk appetite? I have 3 words for you. Cautious, volatile, and selective. Be cautious, be volatile, be selective. Tonight, traders will avoid over-leveraged tech, prefer stable Dow type names, watch the yen like hawks, and reduce risky positions. I think many people will also rotate into auto industries or industrial sector, and I think the risk appetite will cool but not collapse. The ADP weak data still supports rate cut hopes. So what we get is a tug of war between rate cut optimism vs yen hike fear. Elevated volatility, sector by sector divergence, expect the market tone to be more choose wisely, risk selectively. So, are there 3 major indices healthy? Will we rise or top out? So now let's dive into the technicals. This is what everyone wants to know. Will the market continue to rebound or are we running out of steam? Let me know in the comments what you think. I'm gonna have a sip of water. I'm gonna go back to the S&P 500s. I don't know what's wrong with me today. One moment, guys. Let me check this out. Hold on. So, do you think 6,780 is the lifeline? Healthy or not? The S&P rebound was too fast and too steep. And what does that quickly usually requires? A pullback. This was too steep. This was too steep. This rebound here was too steep. And what goes up that quickly usually requires a pullback or a sideways it either requires a pullback or a sideways consolidation. Right now we're clearly losing momentum. 6,780 is absolutely the key level. And why is this a lifeline? It's the lower boundary of the short-term structure. It's where major funds, JP Morgan, etc., position capital. A lot of bigger, like JP Morgan, have positioned their capital right here. It's where major funds are currently holding and they have already placed their capital. Breaking below, it means the trend structure breaks. If 6,780 holds, we consolidate and we can recover later. If 6,700 fails, a deeper correction is in sight. Tonight's expectation, more likely sideways, not new highs. The market needs some time to digest profits. And yeah, so for tonight, do not have high expectations. Let me see. Okay. So, Nasdaq. How long will it chop? Breakout possible? Do you think 23,488 or 23,200? How long will it chop? Is a breakout possible? Nasdaq structure is slightly stronger than SPX, but still boxed in. So for 23,234 is a support line. One moment. However, we're looking at one more thing here. Right now we're in a range. So you can see. We're in a ranging environment. And ranges usually last 3 to 5 trading days before resolution. Is a direct breakup possible? Yes, but probability is low unless major mega cap like Google, Microsoft, Meta surprises us with some momentum. So for tonight, expectations, range bound, choppy moves, not a clean breakout day. But do you know why Dow Jones is the strongest? Can it hit the new high? Do you know why they are strongest? Because industrial benefit from rate cut expectation, less exposed to AI volatility, robotics and auto sectors are heating up due to the news. So basically the news that I showed you about Trump's Trump's announcement yesterday about the automotive industry, which also is a strong indicator for why Dow Jones is doing well. So because it's less exposed to AI volatility, robotics and auto sectors are heating up after the announcement. And this one, yesterday's candle engulfed 4 previous days, which is a very strong bullish signal. This is a strong bullish signal. So this is a classical continuation pattern, what we're looking here. This, can it make new highs, do you think? Yes, a very high probability. The key resistance is, let me check. I think I would put the key resistance for this chart. Resistance, let me see. Let me see where I would put this. Okay. For the resistance, I would put it at right here. This will be my resistance line. $4,431. Tonight, the Dow has the best chance among all 3 indices to break the high, lead the market, pull more capital into industrial names. So, now if you don't have any questions, let's move on. Which leaders and sectors have real opportunities? And where you should board the train today? So, Nvidia, why no rebound? Is 172 the bull bear line? Do you think $172 is a bull bear line? Sorry, I said it wrong. Let me change that. I think it will correlate with our previous one. I'll change it to yellow so you can I'll change it to red. So, do you think this is a strong bull bear line? Nvidia is struggling for one big reason. The market doesn't believe the chip ban narrative anymore. Even after the ban lifted, rumors fund remain skeptical. Too many speculative flows, AI spending concerns, crowded long positions, unwinding, and still stuck in a downward channel. Can we see that? Do you see this downward channel? We'll start at the lowest here. Lowest here and do the channel. And I'll drag it up. So we're still in a downward channel. $172 is bull bear life or death line. above $172 is a possibility of a reversal, or below 170 or below 172 is a continue of a downward trend if it goes below 172. Tonight, do not buy. Be patient. The best opportunity is when it touches the 172 area. Tesla? Now let's go to Tesla. If you have any questions about NVIDIA, let me know. So, let's recap Tesla. Do you think Tesla can claim the 455 and reclaim this channel? Can this rally keep exploding? So what does Tesla have? Tesla has clean reversal. We're looking at a very clean reversal here. This was a very clean reversal. And it has strong volume. Clear trend structure. To officially return to the rising channel, it must clear the $455. If Tesla hits the 455, if it hits the 455, it re-enters a long-term trend. Momentum ignites, new highs possible, and other sector gets lifted with it. So tonight, Tesla is one of the best momentum setups. Watch 450 like a trigger line of a possibility of an upward explosion. So, hot sectors. Do you think auto and robotics, will they explode again? These two sectors are hot for a reason. Autos, Europe auto stocks ignited this morning, and US autos often follow this pattern. Tesla leadership boosts sentiment, and lower rate expectations help big ticketed items. So I would expect another push. And Trump's comment on robotics ignited the sector. iRobot is up 80% overnight. Momentum traders love this theme. Could continue for 1 or 2 more days if sentiment holds. So tonight, these are the two sectors where explosive plays may reappear. So the final takeaway for this live stream was all of these so interesting news that we are going to be watching like hawks. So, before we wrap up, I want to know if you have any questions at all. So, and to wrap up today's market outlooks, let's quickly summarize what's happening and what we should be watching going forward. Rand rate hikes fear equals global liquidity drain. We've seen some pressure from yen rate hike fears, which are causing a tightening of global liquidity. This could put a damper on a risk appetite. So keep an eye on the yen's movement. So another one which we discussed is the market sentiment. Be cautious, but no collapsing. Overall, the market sentiment is cautious. There's no panic, but we're in a period of consolidation. It's more of a wait and see moment rather than a full-on risk-off sentiment, which is important for traders to note. For the SPX consolidates and the X ranges and the Dow leads. As for major indices, the S&P 500 is in consolidation mode, taking a breather after recent move. The Nasdaq and DX is in a tight range. Tech stocks are still a bit volatile, especially with names like NVIDIA pulling back. The Dow Jones continues to lead, benefiting from more stable sectors like industrials and consumer goods. Best play is Tesla. Wait for 455 and autos and robotics. If Tesla breaks above 455, it could be a good buying opportunity, especially with the positive sentiment around EVs. Sectors like auto and robotics are still solid picks as long the broader economic backdrop holds steadily. So for now, avoid Nvidia until the $172 area. For Nvidia, it's better to stay on the sidelines until it hits the $172 level. The current price action suggests it could be due for a deeper pullback. So wait for a more favorable entry point. That's the outlook, folks. So make sure to keep an eye on those critical support and resistance levels for S&P and Nasdaq, and also the Dow. This could give us a clearer picture on the market's direction in the short term. Pick sectors that are showing relative strength. With the yen-driven volatility, some sectors may outperform others, so choosing wisely is crucial at this moment. Volatility driven by global liquidation concerns, particularly related to the yen, means we have to stay extra cautious with our risk management. Tight stop losses and proper position sizes be essential for navigating these choppy waters. That's the outlook, folks. Stay vigilant, watch those levels, and be selective with your plays. If you have no further questions, stay until next time, and happy trading and take care. Thank you for watching this live stream. I'm so happy you joined, and like and subscribe and hit the notification bell. Let's grow this community together.